evening to each one of you. On behalf of Bangalore Chamber of Industry and Commerce, we welcome you all for this exclusive session on analysis of the budget proposals to the Customs and SEZ Provisions. On behalf of the Chamber, we express our sincere thanks to Mr. D.P. Nagendra Kumar, who is the member, Central Board of Indirect Taxes and Customs, for accepting our invitation to deliver the keynote address at this session. Thank you very much, sir. We deem it our privilege to have you amidst us, sir. This session is organized under the aegis of Indirect Taxes Expert Committee that is chaired by Mr. Badrinath, who is the partner Singvi Dev and Uni, co-chaired by Mr. Arun Ramachandran, who is Head Taxation Tata Consumer Products, and mentored by Mr. P.V. Srinivasan, who is the advisor to Wipro Limited, and Mr. Shivdas, who is the Senior Advocate Shivdas and Shivdas Law Chambers. For the benefit of our members, we have muted the audio and video during the session, and we will enable the same during the Q&A session at the end of the program. And I will now hand over the stage to Mr. Badrinath. Over to you, sir.
Thank you. Thanks, Rupa. Thank you so much. First things first, it is 2 days after the budget. We are talking about indirect taxes, basically around customs and GST. We have two stalwarts who need actually no introduction. So let me not take too much of time on that. We have Mr. Nagendra Kumar. Sir, I'll take the liberty of calling you our very own Mr. Nagendra Kumar, who was with us all the while now at Delhi. He's the member of the board. We are honored, we are privileged to have you here today, sir. Thank you so much for readily agreeing to spend that 1 hour with us today. Thank you so much, sir. The format will be as follows. We'll hear it out. We'll hear the keynote, the overview from Mr. DPN, and then we'll hear it from Mr. Shivdas, who's going to walk us through in terms of the why and the what of all the amendments that have happened in the customs and the SEZ matters. So let me not even mention what are the highlights of the budget. Let me not steal anything from both the stalwarts. I'm eagerly looking forward to hear from both of them. Sir, over to you, sir.
Yeah. Am I audible now? Yes. Good evening, everyone. I think it is indeed my pleasure that I come back to Bangalore virtually to participate in today's deliberations with Shivdas, Mr. PVS, Mr. Badri, and all other distinguished panelists in today's discussion, and also the participants of this important program. Budget 2022, as by this time all of you would have seen, had no surprises insofar as taxation is concerned. Be it on the direct taxes or indirect taxes, I think, as our Honorable Finance Minister mentioned, that there has to be stability, there has to be continuity, and there has to be predictability insofar as the taxation are concerned, particularly in this period of pandemic and the transitional phase we are just going through. Still, the pandemic is not over. Therefore, we are very conscious of the fact that this is not the time for us to bring in major as far as taxation is concerned. Talking about indirect taxes, I think the budget would be very, very contextually relevant only in respect of the customs, for the reason that changes what has been brought in the finance bill insofar as GST is concerned, all to the changes which have been proposed, recommended and approved by the GST Council in their 43rd, 44th and 45th GST Council meetings. To that extent, there is no surprise element in respect of the changes which has been proposed in the GST part of it. Having said that, the philosophy, as I underlined at the outset, that we would like to have a stable tax regime. Coming to the customs, the foremost factor that I would highlight, of course, Mr. Shivdas will take you through the details and nuances of it. First, let me talk about those changes in the tariff-related matters. Insofar as the customs tariff is concerned, this budget is going to be one of the very important changes what it is bringing into. In terms of review of the exemptions, over a period of time, the custom duties have come down in keeping in alignment with ASEAN countries' levels. We have operated many of those concessions and exemptions through the route of notifications. Now, our approach now is to simplify the customs tariff. To that extent, I think bringing the standalone notification which provided for a concession or exemption to a tariff line item into the tariff itself. Now, that would require certain alignment of the tariff lines for which certain additionalities will have to be added in the tariff at HSN level. It also would require alignment to that extent. So that's one exercise. I think by this time you are aware, the finance minister mentioned in the budget speech that close to almost about 350 exemption notifications have been either proposed to be deleted with effect from 1st April 2022, or it could be at the outermost limit by the time of 23 March. So that's one thing what we are looking at, I think will bring simplification in tariff. The second important, in this process of elimination of some of this exemption notification, which has outlived its utility, and also with regard to alignment of standalone notification, which is forming part of the tariff, I think we have also taken note of one of the important areas in terms of rate rationalization, that is on the capital goods sector. The capital goods sector, which has been governed by more than 40 and odd notifications, including the project import regulations, would require a sort of a phased removal of those exemptions, keeping in mind the capacity available for producing such goods in India today, and also keeping in mind the Atmanirbhar Bharat mission of the Government of India in its policy perspective. Now, the second important thing in the customs tariff, basically, if you have to talk about, I think I'm not going into the sectoral things. I think that's for the specialists, distinguished speakers to take you through those things and also look at how it is going to impact your industry in particular. But I would broadly say the second important thing which you have to keep it in mind in the customs so far as the budget is concerned is with regard to the ICGR, the imported goods, the IGCR regulation. The imported goods at concessional rate of duty regulations is in force for a very long time, but it has been inflicted with a lot of procedural complications, and at the ground level, it has not been found to be very user friendly. The changes what has been brought in the imported goods at concessional rate of duty presupposes one, creation of a common customs portal through which an identification number obtained as a one-time measure could benefit you in conducting your business insofar as receiving imported goods at concessional rate for the purpose of either export production in a self-regulated manner. The permissions which are required at the transaction levels and all will be a thing of past. The moment you code that IIN number in your bill of entry, including the running bond, the debiting of the bond account insofar as those imports are concerned, the re-export of it, the job work part of it, the clearance of the waste and scrap, and also subsequently clearing the goods from the scheme by taking it out from the regulation, etc., etc. All of them going to be effective from the common portal. And that is intended to be activated by end of March 2022. So this is going to benefit in terms of manufacture and also import of goods without payment of tax for the purpose of export production. This is the second important move in the last 2 years after we brought the manufacture and other operations in bond regulations, wherein we have simplified the procedures to a larger extent. So this is the second major important reform, I would say, in the indirect taxes so far as the customs is concerned in this year's budget. The third dimension to this is with regard to the legislative changes. The legislative changes, all of you are aware by this time, are restricted to one of the important key provisions in the enablement and assignment of the functions of the custom officers in terms of the amendments what we have brought in section 2, section 5 and section 110A, along with clause 96, which gives a validation retrospectively. Now, this was necessitated on account of the Honorable Apex Court's observations in Canon India judgment. We have had a long history on this matter with regard to who is the proper officer in the customs. Perhaps there were gaps in understanding, and also there were some of the deficiencies pointed out by the Apex Court when it rendered the judgment. Taking note of the observations of the Apex Court and also keeping in mind the larger interest of the organization and the public good, the amendments have been made in a prescriptive manner for the future. Those prescriptive manner in which we have brought in now brings in certain alignment with section 234, read with section 51A, 51B, And also we have also taken some sort of a futuristic approach in terms of specifying the criteria so that we become very objective in our matter of assignment of functions and jurisdiction by introducing section 5.4. The criteria have been very clearly laid down that would take into account the technology which is changing, the faceless customs, the requirement for keeping more than one set of officers for doing the same set of functions like what we have done in 5.5. For example, if I talk about the faceless assessment, we have an assessment group and there is also the port group. So simultaneously, they have to attend to the function relating to section 17 or probably, I think, examination, etc., etc. Now, we have also taken and the source power that there could be situations where a same class of officers or different class of officers could be entrusted to perform the functions, but that we will only be looking at as an exception rather than the rule, keeping in mind the observations of the Honorable Apex Court. Now, having provided that enablement in section 234, section 5, what we needed to do is by introducing 110A to be fully compliant to the canon judgment what the Supreme Court has asked us to look into. Now, that canon of bringing certainty in terms of exercise of power by only the proper officer. I think insofar as where such power has been exercised in terms of assessment, be it on section 17 or 28.4, should that matter be a matter of an inquiry, investigation or verification, including audit? That authority which conducts the investigation, inquiry, audit or verification would only require to complete that part of the job of inquiry, audit, investigation, etc. Forward the documents along with the report to the jurisdictional officer who originally exercised that jurisdiction. Let us say in this case could be an assessment officer. That officer alone becomes a proper officer. I think we are providing for a future a certain amount of clarity in what in our humble opinion we think that should address the concerns what Supreme Court has flagged to us to look into. Now, the challenging aspect is how do we look at the actions which have been done in the past which did not get upheld by the judiciary. Now, the retrospective amendment, section 96, I think that's for the experts like Mr. Shivdas to take you through the further one. But retrospective validations are nothing new in this country. We haven't done it in the past. There are views and counter views, but from the policy perspective, from the government, what we would consider that is that I think in all that enablement, what we are looking at, what the powers have been exercised by an officer appointed in section 4 to get validated. Now, yet another important legislative amendment in the Customs Act is with regard to section 14. I want very clearly to mention to all the erudite participants of today's workshop to say that section 14 valuation is very, very clear that fundamentally it is a transaction value. But having said that, there has been issues with regard to certain class of imports or certain kind of importers where there is an issue with regard to the correctness of the value declared. Whether a value declared could be challenged given the context it's a transaction value. Taking into account the guidance from some of the High Court judgments, I think we have put it very clearly that where board has reason to believe rather than individual assessment officers discretionary belief or a doubt at best, I think we would come out with a detailed guidelines as to what would be the criteria, and the criteria would be largely driven by data and empirical evidence, and that would be based on an evidence-based decision making rather than as some sort of a matter which is reopened with regard to suspicion or doubt. So that enablement will provide some sort of a data-driven approach for the board to look at, and what is that we are looking at. That value declared can still be accepted, but those declarants will be put into additional scrutiny or reporting obligations. That's what we are looking at. That's an important amendment what we have proposed in the budget. Of course, it will come into effect the day the Finance Act gets enacted. The rules will have to be put in place to bring in more clarity on that. We are working on that. Now, the other aspect is very, very negligent insofar as the advanced ruling is concerned. We brought in a maximum time limit of 3 years for the validity of the advanced ruling and also withdrawal of their application for advanced ruling, which was 30 days now to this. Those are all minor changes on that. I wouldn't like to deal with that in detail. Insofar as the other aspect is concerned, since the workshop today also mentioned about SEZ, I thought it's more appropriate I must mention about what exactly the Honorable Finance Minister meant in the budget when she had mentioned the Part A of the budget in Para 86 that she mentioned that there would be a complete revisit on the SEZ Act and the legislation will be revamped. While that will be the jurisdiction of the Commerce Ministry to look into and then come out with the proposed changes in the legislation. Because as you're all aware, SEZ Act was enacted in 2006, and since then the government has been adopting a number of reforms, including the production incentive scheme, phased manufacturing program, and Project Gati Shakti. A lot of projects have come into that, and a lot of changes have happened in terms of the governance itself. So it's time that that law is rewritten to make it in sync with the current thinking and the policy prerogatives. Now, very important thing in the SEZ we must take note of is with regard to the para in Part B relating to what Honorable Finance Minister said about aligning the custom processes relating to SEZ in the custom automation. And that's expected to be completed by September 2022. This is very important. I would like to emphasis upon this, what we really meant, what the Honorable Finance Minister meant by saying that in para 186 or whatever it is. I think basically we are looking at aligning the SEZ operations. For example, if any clearance happens from the SEZ or any import into SEZ happens, I think entire thing will come into the IceGate portal. Once it comes in IceGate portal, whatever interventions will have to happen, it will be risk-based. Today we are looking at facilitation at the highest level in the IceGate with RMS. The same very facilitation will happen. Days will be things of past where an authorized officer has to physically sit and give a rewarehousing certificate, or you have to be bothered with the question of seeking approvals individually on a day-to-day basis for SEZ operations. I think we'll seamlessly integrate the operations of the SEZ, which basically deals with the duty consistent exemptions, vis-a-vis what the IceGate portal, which provides for a physical import, which is happening today through the customs ports and ICDs and gateway ports. That's going to be a very, very important initiative. The technical prowess proven by the IceGate automation has been acknowledged by the government, and the SEZ operations will also come into ICS 1.5 and through the IceGate portal. So that's going to be an important game changer insofar as the domestic SEZ operations are concerned. We will integrate on that. That is in a nutshell with regard to the customs and nuances. I leave it for the experts to further deliberate upon that. Of course, there will be a lot of discussion with regard to the canon. And I'm sure, I think it could be no better person than Mr. Shivdas to answer and deliberate upon that. I will leave it to him to deal with those things. Coming to the GST, though there is no surprise element I mentioned, but I must mention broadly, looking from a government perspective as to why these changes are being brought in and what is the roadmap for GST. As you're all aware, in the 4.5 years, over 46 GST Council meetings, I think a lot more effort has been made in streamlining the tax reform to make it very, very precise in terms of administering it electronically in a systemic manner. Now, over the period, we have realized one thing, that the original design of providing GSTR 1, 2, 3 for whatever challenges we had in technology, we couldn't implement that. Today, by and large, in 4.5 years, the taxpayers have more or less settled with a summary return like a 3B return, and also with an R1 return, which is in the outward supply statement. In the 43rd GST Council meeting, it was decided that this schema will continue, and we will once for all give up the 1, 2, 3 statement approach what was originally designed. In sync with that decision, we are deleting section 41, 40, so 42, 43, and 41, 42, and 43A. Having done that, now we need to fortify the liability statement with regard to an outward supply statement matching. Therefore, in section 16, we are bringing in certain amendment to the subsection 2 in the form of class BA, wherein we put that the credit flow into the recipient in terms of section 37 will be in relation to the outward supply statement in 37, which flows into the recipient side in 38, will have to be looked into with regard to the conditions what we are prescribing. Now, many of you may have an apprehension that is it that we are going to go back to the old era, that an officer will hold back a credit and he will say this credit is not allowable, that credit is allowable, and therefore I will play upon that. Certainly the answer is no. It's going to be system driven, it is going to be centrally decided architecture, and this is going to be based on certain evidence-based decision making. If you look at the subclasses in section 38, we have delineated some of them, like a new registrant, or the supplier having not paid the tax or filed the return, or for that matter, a certain class of persons or the class of goods for whom we may put a maximum restriction, etc. But you also will appreciate in that section, we have also provided a window by which, on the recommendation of the GST Council, such of those provisions will not be made applicable to a certain class of persons or to a taxable person or to a class of persons. So we will look upon there is a more discipline in terms of declaring the liability on outward supply statement and also corresponding declaration and admittance of that liability in the tax paying return, that is 3B. Now we operated through a graded approach, rule 36.4, etc., etc. There were criticism. We brought in 16.2 AA. Now we have brought in little more in that direction to see that the written architecture, what we are going to put for the future, is going to be 3B and R1 continuous. So there is going to be stability to that extent. But at the same time, we also have to keep it in mind that an amount doesn't get credited to the government account cannot be utilized as a credit for a long time to come. We need to bring in that discipline. But it's all going to be auto-drafted. The entire 2B today is going to be bringing into your, dependent on the R1 filed by a counterparty dealer. Now, the restriction what we are talking about is to meet some of those legal deficiencies what has been observed. For example, we brought certain rules as an emergency measure. Those changes what we brought in 94 of 2020 in terms of 86B, or for that matter, there are things which happened in a hurry. Of course, we have not notified 86B, but now the legislation will take care of some of those enabling provisions what we have brought in. Mind you, all these things have gone through wide-ranging consultation between the state and the center. Later, it has been looked into and adopted, accepted and recommended by the GST Council, including the formulation what we have brought in the Finance Act has been ratified and approved by the GST Council. Therefore, we are bringing it as a part of the Finance Bill. So that's one set of reforms, one set of things. This is basically to improve the compliance. We are looking at a sequential filing of the R1. We are looking at the sequential filing of the 3B, and ultimately we are going to dovetail the filing of an R1 should precede the 3B filing is where we are taking our taxpayers in the future. Now that will leave behind all the possibilities of somebody trying to game the system, and also at the same time look at the category of persons for whom this rigor could be relaxed or for that matter exempt. We need to look at that as the picture emerges on that. One of the very beneficial provision which has come in the GST is with regard to the interest retrospectively. It is on the credit availed and utilized. So you are all aware of the judgments what we had in InSwift. Subsequently, what in the excise regime we retrospectively amended. Now we live with gross tax liability, but that got amended. Now, as a next step further, if it is not utilized, there is no interest liability, and also interest rates have been retrospectively notified as 18%. Now, we have also brought in some other amendments retrospectively, like common portal being not only for filing returns and payment of taxes, but also for other activities. We have brought in certain retrospective amendments of a very negligible nature, which involves the liquor license and the unintended outcomes of the production of the aquatic food, etc. Insofar as the GST amendments are concerned, these are all proposed in the finance bill. It will get passed by the parliament, and thereafterwards it has to be passed by the individual state legislature, and a date will be identified and recommended by the GST Council by which date all the states, either they bring in the state legislation, are deemed to have implemented from a date which has to be notified, like what we did from 1/1/2022. These amendments by in all probability will come into picture as that notified date which will come into as per the recommendation of the GST Council. So adequate time will be available for taxpayers to prepare themselves in order to also develop the IT system which will enable these things to happen. I think we have done this. That is with regard to the GST. Insofar as excise is concerned, we have done very minor changes. In order to keep in mind the bio-friendly fuels, we have introduced two tariff line items: ethanol blended petrol of the BEAT standard E12 and E15 fuels. In order to encourage their production and consumption in the country, by virtue of a levy of 2 rupees per litre on MS and diesel, we have just introduced that basically to ensure that this ethanol blended petrol and biodiesel gets more and more user acceptance in the country. Other than that, I think there are very minor changes in excise with regard to the section 4A MRP based notification, which has been pruned to keep in mind what exactly is subject to GST excise duty in terms of NT number 84 of the schedule 7. By and large, I would say that I think in this budget, our object has been to keep no rate changes, but keep simplification as a continuing progress, whether it is the rate simplification in customs, whether it is notification review, whether it is ICGR, whether it is integrating the SEZ online with the customs ICS 1.5, or for that matter, the electronically making a stable tax process in GST, our effort has been to provide for stability. Of course, the budget would be subject in detailed discussions, and we in the board would look forward to suggestions and feedback that would be still be brought to our notice. And should there be any things which were to be looked into in deeper hindsight, I think we are with an open mind on that, and still we have some time to deliberate upon that. Having said that, let me tell you, I think in the whole process of the budget making, I being in the board, I have witnessed it at a very closed quarters. I have seen the budget process being made. I think the whole process has done a lot of deliberations, the consultation with the stakeholders, interministry consultations, and subsequently, I think many of the things get threadbare discussed, and many of them have brought into the shape after due consideration and taking into mind the overall objective of the direction in which we want to have the stable tax regime. That's all that I want to say from my side, and I look forward for your meaningful interaction with all the participants today. And I'm sure, because we keep always mentioning about it in the board and also in the government, that Karnataka is one of the very advanced tax jurisdiction, be it on the state side or the center side. And we do have a very enlightened bar and the practicing professionals, and also always an ever proactive and the progressive, the taxpayers, be it an IT and ITS sectors or the unicorns or the startups, or for that matter, the service sector, which is vibrant in Karnataka. So I'm sure a deliberation in the panel of experts today would benefit all of you in understanding the nuances of the budget, how it is going to impact individually or collectively with all of you, and what are the things which you need to be aware of to be clear about rejigging some of your business processes. I would end here, and thanks once again, Badri, for inviting me to this program. And I'm glad, I think Mr. Shivdas is going to clarify the doubts and also take you through the detailed process. And I would certainly look forward to his specific comments, of course, on the retrospective validation, being a very senior advocate and also an erudite scholar himself in law and particularly in tax laws. We would certainly look at exactly, are we on the right direction or where are we heading for? Okay. Thank you very much, and I'm glad that I could participate in today's program. And Badri, I think due to time constraints, I may not be in a position to continue for a long time on this session. I need to work on some of those things. Probably after deliberations with all of you, maybe I think if there is anything which urgently requires my attention, you can flag it, or I can do one thing. Another about 2-3 minutes I can put. I think probably if PVS or anybody or even Shivdas wants to ask me any few questions, I would certainly answer that before I sign off. Is there anything which I need to be responding? Please do let me know. Thank you.
Sure, we'll do that. Thank you so much, actually. If there's anything, we'll certainly reach out to you. No doubt in that.
Yes.
Yes, sir. Certainly a few takeaways from what you mentioned. Very heartening, very nice to know that, Karnataka is reckoned as one of those advanced states for all those aspects that you mentioned. Thank you so much. I mean, proud to be a part of that. And yes, as you also mentioned, the Canonian ruling, you gave us the perspective of the department. Yes, I think all of us are equally eager to hear Mr. Shivdas out on that in terms of how the retrospective amendment is really going to have an impact on the legal side of it. What happens to everything that has happened or that is in progress? No doubt in that. And yes, sir. The amendments to Section 5.5 and the valuation piece, very relevant ones. And yes, I would like to. All of us are eagerly looking forward to hear from Mr. Shivdas on one more aspect. It's the 135AA, protection of data. More essentially, sir, maybe start with that question. What kind of impact would this have under the GST? Because GST, I think the confidentiality, not published material, not publishing the data, is contained or is in the provisions of law only with respect to the anti-profiteering matters. At least in my reading of the law, I don't see it anywhere else. So how will this impact is one thing I'm sure each one of us are looking forward to see. SEZ, yes, sir. I mean, it's a rebirth, I would say. So yes, all of us are looking forward to, because there are quite a few industries quite a few players who are looking forward to set up SEZs. I mean, the due date is over, the sunset clause is over. So maybe this is the time to start rethinking on those aspects. So with that, we'll move to Mr. Shivdas. Shivdas, again, he needs no introduction. He's been the chair. I was privileged to be a co-chair when he was the chair at BCIC. Now, yes, he's the go-to man for me for a lot of things that I am doing at the chamber. Thank you so much, sir, for readily agreeing to, address us today. With that, we'll move to Mr. Shivdas. Sir, over to you.
Very good evening to all of you. I think I should start with the fact that DPNs are always amazes us. The ease with which Badri, you are able to hear me? So you are able to hear me,
Yes.
sir?
Yes, sir. Yes, sir.
So the ease with which he moves through the subjects, the various changes without I really referring to the notes, I think is really amazing. What I struggle to put across as slides maybe for a day or two, I think, sir, you managed to put it across in about 25-30 minutes. So, and it's nice to have a perspective of the department on this. The whole reason why we always have you is to see the perspective of the department on this. So what I would like to do is, I mean, as I go through the changes, I always see this from an assessee's perspective.
Sir, you are on mute, sir.
Am I okay now?
Yes, sir.
Okay. Now, how the changes affect an assessee? For example, I would give a small example of the changes.
You've gone off to mute.
Now is it okay?
You are audible, sir. It's clear, sir.
Okay. For example, sir, the changes that have been made in this IGCR rules, import of goods at concessional rate, the whole thing is sought to be automated and linked to the manner in which right from the stage where the application is filed and then the movement of information goes from the local GST to the customs, and then we get a permission from the customs, import the goods, come back, give a consumption statement on a monthly basis, etc. It's nice to hear that it would be automated, but given the challenges which the assessees, at least the importers, are facing, in at least two aspects which I would say. One is the way in which the DGFT portal is now operating and the manner in which their experience has been with the GSTN. Now, and then the customs portal. As you rightly said, IceGate has been a good experience for a number of companies over a period of time. But given the experience of these portals, now when they are told that this is going to be a situation where you can put in details across quite easily and then the information flows through, the apprehension is still there. I mean, how do we really get the benefit out of it? For example, if some company imports, let's assume about 100 parts under the ICGR rules, and then uses it and then over a period of time and then exports it on a monthly details to be given. They are not too sure how it's going to get implemented, how beneficial it will be for them in terms of reporting. Because if the system starts eliminating or the system starts rejecting the information on a ground that these columns have not been filled or that these columns don't match, then we may have an issue on this. So that is where I would always see these sort of portals creating rather a mindset to the assessees. Because even today, to be very frank, sir, while everybody looks at GST being a systems driven, there is always an element of, I would say, an apprehension that is it going to create problems for me? So that is something which I think the government should really come forward and maybe try to facilitate it much faster. Because in fact, some of the companies do tell me that their experience with the DGFT portal has not been so pleasant. They are uploading it and then they are being asked to do it all over again. So these are all small things which I thought should definitely be looked into by the government, sir, when the automation is being seen as a way forward in terms of correspondence. That I thought I should bring it to your notice, sir. Do I go ahead with my presentation, sir? Badri, I'll go on to share my screen.
Yes, sir. Please share, sir. Sir, not able to see it yet. Yeah. You can see it now.
So what I will try to do in the next maybe about 45 minutes or so is to examine look at the changes in the budget that have taken place with reference to the customs and GST. And I have tried to think why these changes have been made, and then what exactly could be the fallout of these changes over a period of time, how the existing provisions and then these changes, how it's going to really maybe create a concern for the SSEs, and therefore I thought let's have a discussion on this so that it's easier for all of us to really understand why these changes have been made. Now, if you look at the focus of budget 2022, essentially the few highlights that are there in the budget are this. As Mr. Nagendra Kumar was pointing out, the SEZ Act is sought to be replaced. Because we don't know how the new act is going to come, but then I think maybe it's about 16-15 years since the old act has been there, and therefore it's time for a new SEZ Act to really come into place, taking into account all the changes that have taken place over the past 15 years and the existence of the SEZ scheme. And the idea appears to be to encourage export competitiveness and also allow the states to associate in developing enterprises. Now that GST is a coordinated effort between the states and the center, I think it's time that the SEZ Act also has a participation of the states on this. Now there are some PLI schemes, product linked incentive schemes for some of the products that are sought to be made in India, especially for the solar power and then the 5G technology, etc. Then there is an attempt to promote startups to facilitate drone technology. Overall, there is an attempt to encourage domestic manufacturing by increasing import duties on few items and granting exemptions on parts of some items which are wearable or hearable. Then specific exemptions have been given in respect of certain inputs that are used for exports. Then the digitization to promote digital India. Then of course the digital currency that is being talked about. Now if you look at the changes in the customs and the GST, this is how the discussions would move on. We'll talk first about the Customs Act and then the changes in the Customs Tariff Act, minor in the Central Excise Act and in the GST provisions. Amendments in the Customs Act, I think the major amendment that has been made is essentially to get over the decision of the Supreme Court in Canon India. The Supreme Court in Canon India essentially held two things. One, they said that once an officer has exercised his power of assessment, the power to order reassessment must also be exercised by the same officer and not by any other officer. So if at the port we have a deputy commissioner or in the hierarchy the commissioner ordering the assessment in a particular manner, and if that has to be redone or reassessed, then it has to go back to the same proper officer So for him to do the reassessment. That's one point which the Supreme Court has held. The second also was that the Customs Act in terms of Section 6 authorizes the central government to empower specific officers, assign functions to specific officers, and it's only when such a notification under Section 6 is issued, the officer will have a jurisdiction to issue a notice. The Supreme Court therefore held that the various notifications that were placed before it, it was not issued by the central government under Section 6, and therefore those notifications don't satisfy the criteria of the Customs Act, and therefore the DRA did not have the power to issue the show cause notice. Now, what is sought to be now made in terms of amendments? DPN sir was pointing out to the various amendments in Section 2, then Section 3, then Section 5, and then the Validation Act in terms of Section 96. Now, I will put out what these amendments have been made, and then maybe it could still be a moot point whether the decision of the Supreme Court in Canon India has been taken care of by the government. But the first thing they have done, and the expressions used in each one of these sections are significant. Now, Section 3 of the Customs Act has a list of officers who will be considered as essentially the officers of customs. Now, there has been a list, existing list, even in Section 3. For example, if you look at Clause A, Principal Chief Commissioner of Customs, or Clause B, Chief Commissioner of Customs. Now, what they have done is they have substituted this entire section. So, substitution essentially would mean it goes back to the date 1. So, they have substituted this entire section and then added the number of officers to this list. For example, the Principal Chief Commissioner of Customs, as also the Principal Chief Commissioner of Customs Preventive, or Principal Director General of Revenue Intelligence. See, essentially in terms of their, I think their seniority, or in terms of the standing, all of them are at the same level, but they have different nomenclatures. Therefore, Section 3 has been substituted to say that these will be the following classes of officers. So all these officers are now officers of customs. That's one change that has taken place, and it is with retrospective effect. Now, what they have done is introduce certain subsections in Section 5. Now, we should remember Supreme Court was referring to the notifications not being issued under Section 6. Now, the government has said that under Section 5, where an officer of the customs has the exercise the powers and discharge the duties. Now, under Section 5, there are few insertions that have been made. Kindly see that as far as Section 3 list was concerned, the whole list was substituted. But when it came to Section 5, the insertion has been made with reference to clauses 1A, 1B, 4, and 5. Now, in 1A, they have said that the board by a notification assigns such functions to an officer of the customs who shall be the proper officer. Unlike Section 6, which said only the central government can do, under Section 5, the board itself can issue a notification assigning such functions. Now, 1B again brought it down to say that once the jurisdiction is assigned by the board, the Principal Commissioner of Customs or the Commissioner of Customs may further assign such functions to an officer of the customs. Then thereafter, in subclause 4, they have said in specifying the limitations referred to in subsection 1 and in assigning functions under subsection 1A, the board may consider any one of these criteria, like for example, a territorial jurisdiction, goods or classes of goods, computer assigned random assignment, etc. So these are all limitations they can have, or the criteria they can have to say that this is how we will assign the functions. But more important is, what is important is clauses 1A and 1B, where the board has now got the power to assign the functions to an officer of the customs. So if you read this with section 3, where the list of officers are given, the board can issue a notification authorizing the DRI officer to be a proper officer. And the principal commissioner also can do that in terms of what his jurisdictions are. So the board can assign a principal commissioner. The principal commissioner in turn can do it to somebody else, or the board can directly do to a DRI officer. So, but this section 5 amendment appears to be prospective. So that is why the expression used is insertion, which is what even that's what the confirmation appears to be, that we would like to see it as a futuristic challenges or futuristic changes. So this appears to be effective from the date it is inserted. Now, section 234, which is the definition of a proper officer, said in relation to any functions to be performed under this act, means the officer of the customs who is assigned those functions by the board or the principal commissioner of customs or commissioner of customs under section 5. So now under section 5, they have been given the powers, board and the principal commissioner, and then the list of officers is given in section 3, and 234 definition of proper officer will be this officer of the customs who is assigned those functions. So now they have added, in fact, under section 5 is specifically inserted in 234. This also by means of an insertion. Now, all this would mean that from this particular day, under section 5, the board or the principal commissioner will have the powers to notify an officer. The section 3 has the list of officers. 234 also, which is an amendment made for the future, takes into account an officer under section 5. What happens to the past? Now, I think there is a thinking which seems to be reflected in the clause 96 of the finance bill. This appears to be a validation act of whatever has been done in the past. Now, in fact, I had put it out what exactly happened when the earlier decision of Syed Ali had come, where they had amended the section in the Customs Act itself. But today, in clause 96 of the finance bill, they have looked at not necessarily the Customs Act. Like, for example, when they say, notwithstanding anything contained in any judgment, decree, or order of any court, or in the provisions of the Customs Act, anything done or any duty performed or any action taken or purported to have been taken under so and so the Customs Act shall be deemed to have been validly done or performed or taken. Similarly, any notifications issued under the Customs Act for appointing or assigning functions to any officer shall be deemed to have been validly issued, including for the purpose of section 6, which is where I think they want to get over the decision of the Supreme Court in Canada. The purpose for this sections 2, 3, and 5 shall have and always deemed to have an effect for all purpose, as if the provisions of the Customs Act had been in force at material times. And it is clarified that any proceedings arising out of any action taken under the section and pending on the date of commencement of the Act shall be disposed of in accordance with the provisions of the Customs Act. Now, the only question which would now remain to be seen in my view is whether clause 96 of the finance bill, which is a validating section, would be enough to take care of the decision of the Supreme Court in Canada, India, especially when all amendments in the Customs Act, excepting the list of officers, are all prospective. So whether this will take care of the retrospective nature of the actions, whether this will validate the actions for the past, I think would again be a subject matter of, according to me, a litigation. This does not completely solve the problems. This can still be open to a challenge. Let's see how the court reacts to it. Now, this is one amendment they have made, which also is one of the points that was pointed out by the Supreme Court in Canada, where the Supreme Court said that once an officer has got a jurisdiction to assess the imported goods, then the subsequent reassessment also has to be done by the same officer. Now, what they have done, they have introduced section 110AA. And this, according to me, is a good measure. It goes back to the officer who assessed the goods initially. And 110A also is very, according to me, neatly worded, where in pursuance of any proceedings in accordance with so and so, if an officer of the customs has reason to believe that any duty has been short levied, short paid, etc., then such officer of the customs, after causing inquiry, investigation, or as the case may be, audit, transfer the relevant documents along with the report in writing to the proper officer having jurisdiction in terms of such assessment. And it is only this officer who will exercise powers under 28. In fact, this seems to go back to the position which used to be there maybe about 16 years back, where the DRI used to only do an investigation and then pass on the file to the customs for the customs commissioner to re-examine and issue the notices, etc. It's only the last maybe 10-12 years that it has gone back. The DRI did take it upon himself to do the show cause notice and maybe sometimes the adjudication, etc. So this 110A restores the position, and then it goes back to the officer who does your assessment, maybe a deputy commissioner or his higher officer like the commissioner, etc. Now, what does this mean? What it therefore means is that once you declare to the customs at the point of import, every information given by you at the time of import, all information, maybe in the bill of entry or any accompanying documents, etc., will be extremely crucial in order to decide whether the subsequent investigations really throws up any information which is contrary to what was there before the assessing officer at the time of import. Because in the light of the faceless assessments and the technology being used extensively, it's extremely important that the extent of information that is being given at the time of import, necessary information has to be there, so that it is also always possible to defend that it is a different view on the same set of documents and not a complete set of documents itself. Now, all these are changes that have been made in the Customs Act as a result of the decision of the Supreme Court in Canada. Now, this is one of the amendments which Mr. DPN was pointing out. As we always know, that Customs Act essentially recognizes, in cases of transactions between unrelated persons, the transaction value, whatever be the transaction value, provided that it represents intrinsic value. And between related parties, the transaction value gets redetermined in terms of the valuation rules. So these are the only two methods available under the Customs Act. Now, what they have done is they have introduced clause 4 to the second proviso in section 14, where they have said that the rules made in this behalf may provide for the additional obligations of the importer in respect of any class of imported goods, and the checks to be exercised, including the circumstances and manner of exercising thereof, as the board may specify, where the board has reason to believe that the value of such goods may not be declared truthfully or accurately, having regard to the trend of declared value of such goods or any other relevant criteria. Now, I was thinking, when will this provision be made applicable? Because between related parties, the transaction value, as a matter of fact, it's getting rejected, and therefore you re-examine the value. But in case of transactions between unrelated parties, the transaction value is supposed to be accepted as a matter of right. Now, what could happen is, this provision can be used even in respect of transactions between unrelated parties, where the government is of the view that, or the board is of the view that the value that is declared by, let's assume, about 10 importers of the same product from different countries. Certain importers do declare a particular value. The other importers declare a different value. So if there is a huge difference between the two, and the trend is not to the trend in the market is not to have a lower value as declared. Now, under the existing law, it is not possible for the government to go after unrelated parties, because unrelated parties can always agree on any intrinsic values between them, because they are free to enter into agreements on whatever be the values, so long as the values cover the cost, the profit, etc. Now the board can do that even in respect of unrelated parties, if the declared value or the trend in the declared values are not what is normally available in the market, then those transactions also can be looked at by the government. They have given themselves powers under Section 14 to relook at the values that have been declared between unrelated parties. So this is a significant change that is being made, essentially to ensure that evasion doesn't take place. But then how this gets implemented, how is it that the government is going to apply it to individual importers, what classes of importers will be identified, which countries will be identified, these could be matters of discussions. Now this, of course, these are some small changes that have been made. The advance rulings is small changes that have been made in this to say that you can withdraw your application before an advance ruling is pronounced. So even when you participate in the advance ruling proceedings, go for the hearing, and just before the hearing, before the order is passed, you can always withdraw it, saying that I don't want an advance ruling on this. That provision specifically was not there, so that is sought to be included. And very significantly, they have said that any advance ruling shall remain valid only for a period of 3 years, or till there is a change in law or facts on the basis of which the advance ruling has been pronounced. I can understand the second portion of it, where they say that if there's a change in the law or facts, then the advance ruling could not be valid. But to say that it would be valid for a period of 3 years is what I was trying to find out. Why is it? Is it because essentially the advance ruling disputes, at least under the customs, are more in terms of the rates of taxes, because on values normally advance rulings are never obtained. Classification will now essentially depend on the rate of duty. Classification are intricately linked. So therefore, if there is, and all these exemptions today are either having a sunset clause in terms of section 25(4), they have said 2 years will be the conditional exemption can be given. It can of course be extended, and now of course you have the sunset clause to say that for certain exemptions we will prescribe a 3-year time limit, or on a yearly basis it will be reviewed. Maybe because of these changes they would like the a limited operation of the advance ruling. So therefore they have said that we will have it only for 3 years. Now this is one section they have introduced under the Customs Act, where if somebody publishes an information relating to the value or classification or the quantity of goods entered for export from India or import into India, and unless required to do so under the law, it shall be punishable with imprisonment. It's more to ensure that the confidentiality is maintained of the various details, import and export details from various countries into and outside the countries. So this they have made it more like a criminal offense with a punishment and all that. Now, these are the changes as far as the Customs Act is concerned. Customs Tariff Act, if you really broadly, if you see, there are about 3-4 major changes that have taken place. As Mr. Nagendra Kumar was pointing out, there is an attempt to withdraw about 350 exemptions that are there. From the any number of exemption notifications that were there, sought to be withdrawn. Then the exemptions in respect of capital goods, project imports, like your EPCG notifications and things like that, are sought to be phased out. So they have identified about 40 exemptions, etc., and that will be considered as the basis. Then in respect of certain notifications, they have indicated the sunset date. That is where the notifications will expire up to from a particular date. specific goods have been given an export benefit in terms of duty-free imports and then use it for the manufacture of the exported goods, like for example, handicrafts, leather, etc. And then the revised ICGR rules have been made completely digital. These are normally broadly the changes that have been made in the Customs Tariff Act. So quickly run through only this, that some of these exemptions are withdrawn in respect of items that are there, circuit breakers, in terms of offshore oil exploration. All these will now be there only till a particular time that is there indicated in the notification. Then earlier we used to have project import and then the exemptions in respect of industries. All this now sought to be restricted from a particular time. Similarly, some of the basic exemptions have been withdrawn in respect of some of these items that are, for example, kerosene imported by the oil companies for ultimate through the PDS. All these exemptions were there for a number of years. So all these are sought to be exempted. Now, there is also a change where some of these exemption notifications entries have been moved to the tariff. What the letter uses the expression tariffization. So all these items that are there in the notification are now moved to the tariff itself. So that what is there in the tariff will continue to remain over a period of time. Notifications can be issued and withdrawn, introduced at any point of time. If it goes to the tariff, then it has to be go through the process of law. So this is how they have made in respect of some of these changes. And these exemptions, as I said, project import exemptions have been sorted out, phased out. For example, new projects registered after 30th September 2022, there would be a rate of 7.5%. And for the existing projects registered till 30th September 2022, we will have the old BCD rates, 0% or 2.5% or 5%. Similarly, in terms of what was the amendment that was made last year in terms of section 25, for these goods, these notifications, sunset date has been prescribed for certain entries. For example, 39 of 96 notifications relating to defense and internal security forces. These entries have been omitted. And of course, for the remaining entries, there will be a sunset clause up to 31/3/2023. Essentially to enable the companies to really reorganize their affairs and be prepared for a rate of duty on the products, so that essentially there is a chain that is maintained right from the stage of import up to the stage of consumption. Some of these changes where there has been an increase in respect of the product. There are some new entries that have been added to the first schedule, where new categories of fuels being introduced, then identification of exports of handicrafts, then these notifications or the entries have been to be in line with the HSN amendments that have been made effective from 1st Jan 2022. And also I'm told that a lot of ministries also wanted the clarity on the classification, so that there is uniformity in terms of understanding. So some of these notifications have been rescinded. Similarly, they have introduced this phased manufacturing program for some of these products like a smart meter or a wearable device or hearable device, etc. So the focus essentially is that for these products, the changes would be in such a way that the local manufacturers encouraged, exports are made, etc. This is the amendment which Mr. DPN was pointing out. For a number of notifications, there is a condition that these rules have to be provided. The import of goods are concessional rate rules. These came quite some time before under the 98, 97, etc. Now, there was a detailed procedure to be followed, that right from the stage of from the factory where the manufacture has to take place, there has to be a permission which assessees have to get from the local excise officer or the GST officer. They have to give that to the customs man. The customs officer will, based on this authorization, permit the goods to be imported without payment of duty. It comes back to the customs, the factory where it is being used in manufacture. The excess quantities has to be duty has to be paid. All this reconciliation has to be done. So a procedure was being followed. Now they have sought to make the whole thing digital. So it will be an end-to-end automation in the entire process. So all the information, right from the stage of requirement till the stage the goods come, and then the goods are exported, manufactured goods are exported, then the excess quantity that is there, the removal of scrap, all of them has to be now to be filed through a monthly statement to be done on the common portal. Now, as I was pointing out to Mr. Nagendra Kumar, the experience which sometimes some of the assessees do feel based on the experience they have with the DGFT portal or the GST and etc. There is an apprehension how this will work out. Of course, we'll have to see how the system is designed in such a way that this information is accepted without much concern, so that there is a free flow of information and there is no obstruction to the movement of goods and then the ultimate clearance. The whole purpose of all this is only that. Now, this is a specific serial numbers that have been introduced for specific products where the IGCR rules will be followed, and then changes made to ensure that exports take place. So this will be the consequences of all these changes that have been made, measures taken to ease the trade compliance and to encourage domestic manufacturing. On some of the products, the social welfare charge, the social welfare surcharge that was there, there's an exemption notification on some of these products. And there is also a circular that has been issued saying that if the customs duty is zero, then the SWS also will be zero because there is no value on which it can be calculated. This, according to me, was necessitated because as a wrong reading of some of the decisions of the Supreme Court did land a situation where number of companies did get notices to say that rather inquiries to say that they have to pay the ESWS even in a situation where the customs duty was nil. So now this clarification should really put at rest these controversies. We now have a look at the amendments to the Central Excise Act. As I said, this is only to introduce the two new products in the entry, E12 fuel and E15 fuel, both for the purpose of blending fuel. So it's only for that limited change these changes have been made. Similarly, for certain products where the excise duty is still being levied and based on what was the retail price at that point of time, and then these sections have been saved for these products, these notifications have been issued. We'll now have a look at the GST changes. There are a few changes that are significant, and the changes are essentially to regulate the manner in which the filings will take place, the credit will be taken, etc. Now there is an amendment to section 38. Now once me as a receiver gets my supplier files this GSTRN1, I normally consider his GSTRN1. It becomes a basis for me to take my credit because these are the inputs to me. Then I take my credit based on my 3B. Now what they have done is the outward statement under section 37 will be the basis for an auto-generated statement to be made in the system. So the auto-generated statement, which we say let's assume it's 2A or 2B, we'll now have, and this will be done by the system itself. Now that will have details like this. Details of inward supplies in respect of which credit may be available. That's number one. Details of supplies in respect of which such credit cannot be availed, whether wholly or partly. For what? On what reasons? They give reasons here. Suppose on account of the supplies being furnished by a registered person, within such period of taking registration as may be prescribed, or by any registered person was defaulted in payment of tax, and where such default has continued for such period as may be prescribed, or where the tax payable by him is more than the tax actually paid by him, or he avails input tax credit that exceeds the credit that can be availed by him. So these are all the situations which the system will identify, and accordingly the 2A or the 2B would be modified, will be auto-generated, and that will be the basis for me to take my credit. So the earlier situation of matching what the supplier has given with what I have received, whether it is really an input that in which he has taken it as an outward supply, etc. Those situations have been removed. The whole thing will be driven by the system. Now, how this will work, we do not know. Now, what is the architecture of the system which will identify these situations, like a default continuing for a continuous period, and then the output tax being more than the tax payable. All this needs to be looked at to see how it is going to impact the taking of credit. So this 2A, 2B is now out of the bounds of an person who's taking credit. It will automatically come there. Based on that, an amendment or an entry has to be made in 3B. That's one amendment they have made. And consequently, the amendment has also been made in section 16, because section 16 is the parent section based on which the credit can be taken. They have introduced clause BA to say that inserted under section 16(2) and as an exception to avail input credit or invoice or a debit note, the details of input tax credit in respect of which the said supply communicated to such person has not been restricted. So in terms of what we saw the earlier slide, in terms of section 638, if certain restrictions are there, then that cannot be considered as a credit that is validly available in terms of section 16. So these are interconnected changes that have been made. Similarly, the section 29 that talks about change in period for cancellation of registration, they have made few changes to say, for example, a composition man. Now, if he has not furnished a return for beyond 3 months from the date of furnishing the return, or anybody other than that has not furnished returns for such continuous tax period as may be prescribed, then the registration can be cancelled. Now, the earlier section said that if you don't do it for 6 months, then registration can be cancelled. That has been removed. It is now left to the department to say that it need not be 6 months, it can even be 2 months, it can be 3 months. For a period of 3 months, if this return is not furnished, then this registration can be cancelled. In other words, they're trying to come down heavily on cases where the default is taking place and returns are not being filed in time to result in an extreme situation of cancellation of registration. Some of these changes that have been made, wherever we used to have the situation of 30th September being the last date, due date for return for September, has now been moved to November. So, for example, credit note, invoice debit note can be available in the 30th date of November in terms of section 16 or section 34, credit notes, or 37 where the outward supplies can be rectified. So all these are changes wherever September has been made, they have moved it to November. Now this is an amendment to section 37, where, for example, you'll have to file your outward return, your GSTR and 1. So this they say that you have to file your return in time before the 10th of the subsequent month. And they have introduced subsection 4 to say that a registered person shall not be allowed to furnish the details of outward supplies for a tax period if the details of the outward supplies for the earlier tax periods have not been furnished. So you can't file your GSTRN1, for example, in February 2022, for February 2022, unless you have filed your GSTRN1 for say Jan 2022 or December 2021. So unless you cross that stage, you can't file the GSTRN1. Now, not too sure whether suppose you miss out for 3 months, can you file everything sequentially? Whether the system will accept is something which it remains to be seen. Somebody who has not done it for December or January, but wants to do it together in February, in the same sequence of December, January and February, but that will be permitted. We are not too sure, but this is the restriction they are bringing. So this is linked to it, that GSTRN for a particular period has not been filed, then GSTRN 3B for the subsequent periods also cannot be filed. That was a situation where GSTRN 1 has not been filed for a particular tax period, then for the subsequent tax periods you can't file. Now once that is restricted, they are now bringing the restriction in terms of your return under section 39, that you can't file your 3B unless you file your GSTRN 1, because your 3B is going to be the basis for payment of tax. So GSTRN 1 and 3B is getting linked to ensure that the compliance takes place and the tax payment also takes place. Now section 41 earlier indicated that the input credit, you can take it on a provisional basis, on the self-assessment basis. But now with the changes in section 38 and the introduction of the auto-populated statement in 2B, that provisional basis has now been removed. And now this is said that you'll have to take credit based on whatever gets communicated to you in terms of 2B, and then you will take the credit. And still, if there is an excess credit being taken, then that needs to be reversed, which you will take back in case the supplier has paid the defaulted tax, etc. All these, all these provisions which provided for the matching of the situations has now been removed, because there is no need for all that. So 42, 43, 43A, all these have been omitted. This is again section 49 has been amended. Subsection 10 has been substituted in this to say that you can transfer any amount or of the electronic cash ledger to your own registering units or the same entity in other registrations. So that you can do now, because instead of having the cash ledger in one registration, if you have excess amount and you don't have an unpaid liability in that place, you can transfer it to another registrant of the same entity, and that will be considered as a refund of from the electronic cash ledger. What is significant is the insertion of section 12, where they have said that notwithstanding anything contained in this act, the government can specify such maximum proportion of output tax liability which may be discharged through the electronic credit ledger. Some of you will recall that when we used to have a similar provision in the Senware credit rules, Modware rules and Senware credit rules, where you can't utilize say more than 20% of the output tax liability through a credit, then you'll have to pay through the cash. Now I am not too sure whether that sort of a restriction is going to come back, though according to me, that restriction prima facie goes against the very ethos of GST. Once it comes through the credit ledger, it remains as a credit. Then, irrespective of the output liability, you can always pay the entire amount to it. So, therefore, restrict it appears to be definitely a retrograde step. This is section 50, where this interest that has been on utilization of credit only when it is utilized, the the interest will apply. There's a history where these amendments have already been done retrospectively. There's a very small amendment in section 54, where some of the specialized agencies earlier they have to file the refund claim within 6 months. 2 years is the normal time period, so that has been made applicable to them. Similarly, in respect of supplies made to a special economic zone, now the relevant date will count from when. That they have said it will be due date of furnishing of the return under section 39 in respect of such supplies. So from the date, the due date is there under section 39 of the return, then is 2 years will start. This is what the interest rate that has been reduced from 24% to 18% and also given a retrospective effect. Some of these changes that have been made is only to put in place the earlier notifications that have been done. For example, the liquor license that is granted, whether that would amount to a supply of goods or a service. Now that has, earlier there was a notification that has been the circular that was issued, a Delhi High Court order that disposed of matters based on the circulars. So these notifications were issued on 2019. Now it has been given effect from 1/7/2017. Of course, these notifications have been issued and a retrospective effect is given on the condition that whatever tax has been paid will not be available as a refund. This I thought was a short snapshot of the changes that have been made under the recent budget. Over to you, Badri. Thank you so much.
Sure. Thank you, sir. So that was very nice. A quick gist of the budget from an indirect tax perspective, covering customs and the GST matters. Sir, while I wait for more questions coming from the audience, I have a few, maybe just a discussion, sir. One is, I think, the most controversial, most debated topic of the Canon India ruling being undone. Sir, of course, the government has the power to do what it wants. Maybe, sir, would you like to share maybe 2 lines on, where does this power really come from? See, because a few years back, it was a gentleman's promise from the government to say that, look, we'll not look at any amendments being retrospective in nature, especially where it is, which creates a kind of a liability. This was more, if my memory is right, mentioned in the budget, one of the budgets to cover both direct and indirect taxes. So see, because sir, I've got a message from a couple of them on, not on the post, but on my WhatsApp, to say, does the government really have the power? If yes, what is the use of judiciary then?
No, see, there are two different points. One is to create a retrospective liability when such a liability does not exist is one. Canon India is not talking of a situation where there was a liability did not exist. See, we are talking, these are all jurisdictional issues. A jurisdictional issue is slightly different from a liability being there, but then that gets highlighted through a notice issued by an officer who does not have jurisdiction. So those promises which the government had given earlier was only to have a situation where we understand this provision like this, therefore you are not liable to pay tax. But today we understand the situation slightly different, and therefore we are making you liable to pay tax. That is slightly different from saying that there was a duty liability. The only question is whether A has to issue a notice or B has to issue the notice. In an overzealousness, B thought he had the jurisdiction to issue a notice and issued it. That the government is saying that you could not have done it. That is why most of these decisions, if you will see, the Supreme Court will always leave it back to the authorities of the government to say, if under the law you are in a position to initiate proceedings, please do it. So therefore, that is slightly different from the other situation of liability not being there. Here is a question whether a jurisdiction, the officer had the jurisdiction to issue the notice.
Sure, sir. Sir, just as an additional thing in the same breath, whenever a lot of these appeals that all of us, keep filing and arguing, there is one aspect that goes on, it's a procedural lapse, so you should condone. You should not take it as serious as it is any other aspect in the law. But there are probably equal number of cases where a procedural lapse has not been kind of pardoned, and it has been pardoned. So would you look at this also more on the procedural kind of an aspect, sir? Or
No.
is it a technical one?
No. A jurisdictional aspect is never procedural. A procedural is where instead of undertaking 1, 2, 3, 4 activities, which is supposed an assessee is supposed to do, or even an officer, for example, instead of mentioning section 73 in the notice, he mentioned section 74. He always had the powers to invoke section 73 under the Act. That is procedural.
Yes.
But then, if I don't have the jurisdiction in terms of my working under the Act to issue a notice, that cannot be considered as procedural. A jurisdictional error is never considered as procedural in error.
Sure, sir. Understood. I hope it answers the question who had kind of sent me the answer as well as send me the question. Sir, one more thing in the same breath is on the next important aspect in this budget, which is even Mr. Nagendra Kumar mentioned this 135 88 value section 14 para 88 of the bill, which is with respect to valuation of import goods. Sir, are we opening an unwanted kind of litigation or table tennis kind of a thing with the government between the importers and the government on the other side to say that you question me on unrelated party valuations also? Because see this kind of I'm just adding to what question I have by giving a GST flavor to it. In GST we have this condition where I have to pay my vendor within 180 days. Otherwise, on the 181st day, I have to reverse the credit as well with interest and recredit only when we pay to him. Case where I have best, kind of, somebody has to go on. I have a very good procurement team, right? They've negotiated a very good deal by getting a credit for 365 days. Now I'm being penalized for having such a good procurement team. One is that, but from a business sense that legal and a combination of a business sense that we want to look at it, it is interfering in the way I'm doing my business. Okay, very, very shrewdly, very, very probably pessimistically put, it is interfering in the way of doing my business. So if I extend the same analogy to this transaction, sir, unrelated party, I am able to negotiate with my overseas vendor. So why are you making my doing business more difficult? I thought we are moving in the direction of ease of doing business. So that is the summary.
See, I'm not too sure the intention behind enacting this provision. I'm not too sure about it because, see, there are only two situations that can come in customs. One is between related parties, ignore the value, go to the actual value. Unrelated parties accept the value unless you have sound reasons to reject it. Say, for example, somebody can't be saying, I will give a 90% discount. So, though I have seen situations where there is a 90% discount on situations, and Supreme Court also has accepted. So, in a case where a non-related party transaction is there, to interfere in the correctness of the value is definitely going to be a challenging task. Now, if they have introduced this provision, what they had in mind, I am not too sure. Are they trying to say that same items being imported from different countries at different points of time can have different values? And therefore, the market trend of these goods in the country is not the lower value, but the higher value, and therefore they will increase it to the higher value. How they will do it, merely having a provision is not sufficient.
True.
How they will implement it in a particular case is going to be the challenge. And yes, it can open up a huge Pandora's box on litigation.
The how is going to be a very, very important thing. Sir, this is like, in wastage for that matter, normal wastage. Normal wastage, all of us would have probably heard of 2%, 3%, 10% raw material wastage in the production line. But if you take the aerospace business, the wastage can be, normal wastage can be as high as 95%. The final product could only be 5% of the raw material in terms of weight or size that has gone in. But sir, again, if you're going into unrelated party transactions, sir, at least in my limited understanding, of course, there is a flavor of, laundering money which is the reason for this amendment, or totally, evasion or smuggling kind of activities, etc. Nonetheless, I think, as you rightly said, we have to look at how it's going to be implemented. SWS, sir, your view on what happens to social welfare surcharge that has already been paid in respect of transactions where BCD was 0. Can we claim a refund, sir?
Absolutely, you can.
Done, sir. Thank you. You mentioned also about section 38, GST. There we are going to have this 2B, which is going to play a significant role suddenly in all our lives, which is going to tell what credit I'm eligible to and how much of it I can avail. The input tax credit has been a kind of a debate under the old laws from the time there is this concept of input tax credit, right from mod VAT, then sen VAT, then VAT, then the GST days. Sir, whether it's an input or input service of capital goods for me is so specific to business. How, again, the how will play a very significant role, as you mentioned. But, sir, I would really believe that there is quite a bit of distance to travel before the 2B starts telling us what credit to claim and what credit not to claim. That's one. Maybe I'll see for any of you have questions. Please feel free to unmute yourself and ask. We'll wait for a few minutes. I was mentioning this to Mr. DPN also, the publishing of information. It is confidential. You should not release it in the public domain, etc. Apparently, there is no such provision in the GST, except in the anti-profiteering related matters.
Absolutely.
Sir, but yes, the overview of the Canon India ruling that you gave was very, very useful, sir. I'm sure a lot of us have still questions on that, saying what if, why if, etc.
Let's see what happens.
Yeah. Two things to all the audience there today, all the participants. One is, please feel free to ask questions right now. And if you have something more, please feel free to share it to the Secretariat. As Mr. Nagendra Kumar said, we can send it to him as well. We can summarize all that, and maybe in a few days from now, maybe next Wednesday or Thursday types, if we are able to send him, it'll be great.
Sir, I'm Narayanan from Grindwell, Norton. Can I? Are you able to hear?
Yes.
Sir, this is regarding section 50 within bracket 3 has been amended from 24% to 18% on interest rates. In fact, I queried with the BCIC also on this. What is it, sir? Actually, any erroneously availed input tax credit reversals attracts now 18%, or from July 17 onwards, if anything we are reversing, would it attract 18%? And in case we have filed anything, we have already paid with 24%. Is it possible after this enactment comes into force, the finance bill? Is it possible that we can apply for some refund, etc.? Because we have made some huge interest payments. And second question is this 30th November financial year extension from September 30th. Would it be applicable for 21-22 also? Or 22-23?
No, the amendments to all these sections were bringing it to November will essentially, according to me, operate from 21-22. That is April 21 to 22, because you have all these credits of 21-22 you will get by September 2022. So that also, according to me, will get extended up to November 2022. So that I don't see a problem there. As far as your first point was concerned, see, the interest will apply if you have taken credit and utilized it. If you have not taken credit, or rather if you have taken wrong credit, not utilized, interest will not apply. So if you have taken wrong credit and then utilized it also, you are supposed to pay it back. Now that in a situation where credit wrongly taken and utilized, that you are paying back, you are supposed to pay 18% interest, and that 18% will be effective from 1st July 2017. So if you have paid more interest, you can always claim a refund. Subject to all those time limits. They can come around to say that time limits, etc. will be there. So subject to all that, you will be entitled for interest, refund of the excess interest paid. But the interest will apply only if you have taken credit, wrong credit, and utilized it also.
Thank you, sir.
Sir, we have Mr. Prakash Rao, Mr. Prabhakaran, and all others. Please, everybody. I'm sure they also have a lot of questions. Prakash Rao, sir.
Oh, all of them will give me a call after that.
Nothing of that sort, sir. Everything is clear. The only thing is that a lot of to be prescribed words are used in the legislation. And I don't think that at this point of a time, it's all academic interest that we need to discuss things. Unless the rules are pronounced, that we will not be able to get the clarity.
True.
And
True,
there are no questions from my side.
Yeah, Badri, this is Blaze here. I think, right, I agree to what Prakash said. I think for me, I think the most, and sir, I think started with that, Shivdas sir, with the IGCR rules changes. I am actually, as a company, we are dreading that a little bit, that digital mode. One is just rightly, sir said about, how these systems will speak to each other, one side. But more often, if a company, especially like GE, we transact in 1,000 parts in IGCRD. How should I enter that data on a day-to-day basis, maintain stock for those 1,000 parts right from import to consumption? And at a drop of a hat, we'll send something for job work. At a drop of a hat, we'll send something to re-export. Something will be defective, and all this has to be managed on a monthly basis for 6 months. There's a 6-month cycle of validity for these parts. I mean, the validity is so short. The reporting cycle is made even shorter. It was quarterly, now it is made monthly. So I think we are really apprehensive, and that's one area I think we would want to represent if we can, in some form and shape. I think that's one thought, and I don't know if Shivdas sir has some thoughts around that, but that's a concern we have on the ground in a moment we saw these rules coming in.
Sure.
No, that's something I think we should really bring it to them to say the practical difficulties faced. At least they should see how it works on a trial basis for the first maybe couple of months, say 6-7 months, and then try to address it rather than making entire thing digital straight away and then creating difficulty saying that the system rejects it and therefore we will not accept it. According to me, it should be a parallel system they should follow. Digital plus your manual for maybe about 5 months or 6 months, see how it travels and then try to address it. That according to me is more prudent way to do it.
Absolutely, sir. And the IGCR 3 has almost 35 columns to fill, and I have to fill it bill of entry wise, item wise.
Correct.
I really don't know. I mean, I have a workforce only just to do this now. Nothing ease of doing business here. I don't see it. Absolutely ease of doing, because I have to do data entry, or I have to figure out how my Oracle or SAP system will have to talk to this new system. I mean, that's now a task.
Yeah, you mentioned what I was about to say. I think they're forcing it. They're pushing us to use more of technology.
Absolutely. Yeah, but like sir said, I think they should give us some 2-3 months. They should tell us this is coming from October or September. Guys. I mean, we are on Feb 1st and it's going on live from March 1st, which means April 10th will be the first report due on paper, at least. So I don't know. And I don't know, history. How do people who have been in IGCR for the last 5 years, how does that translate into this new system? I don't know. At least I don't have clarity. I don't know if we need, I don't know, Shivdas sir, if you think there is any clarity there.
No, I see what ideally they would start is, say, for example, if it is 1st March.
Yeah.
So March statement, when you file in April, say by April 10th or something, it will be automated. So what happens is, see, that consumption which takes place during that month, the imports that have taken place during that month, consumption during that month, in stock, and then thereafter the wastage, etc., that gets reported in April.
Right.
So that is how the process will go on.
Agree.
And now, The only question would be if there is any correlation required for some of the past imports, past consumption, etc. How this form will take care, we are not too sure.
Yeah, that's a big concern because I have 5-year inventory. I have last 6 months data, right? Because I can keep 6 months in inventory. I don't know. I think that's, I don't know. It's a little concerning for us as a company. We don't know how to run this program.
No, I think we should start it off saying that even our chamber also can represent to say that let us make it as a parallel process for some time.
Correct.
Have a complete correlation and thereafter launch it. Nobody disputes the necessity to do it online, but then let us do it more professionally.
Absolutely, agree.
Taken, sir.
Sir, I'm Subramani here. Can I have a question, please?
Yes, please.
Sir, this ICGR rules is it applicable for goods which are imported by EOU or EHTP, sir?
No, sir. These are specific notifications that are issued, specifically saying that if you want to avail this notification, these rules will apply. For EOUs, ESTPs, etc., these rules may not apply. They have their own set of rules. EOUs, etc., have their own set of rules. But then these days, EOUs are as good as a DTA unit. All those bonds, etc., everything has been moved. They have their own regulations where you have to file a report every month. All that is already there. So ICGR rules normally will not apply to general situations. It will only apply to a situation where the notification says, if you have to avail this benefit, you should follow these rules.
So the second question on the ICGR rules is I import some goods for manufacturing a particular product, and because the technology changes so rapidly that the product becomes obsolete, and I am allowed to re-export it within 6 months. But one of the conditions imposed is that the price at which I re-export it should not be less than the price at which I have imported it. That becomes really a very challenging situation in the export market because I try to look for some buyer who will be able to take care of my obsolete inventory and your views on that.
You see, there are two ways you handle it. One is they would not like to have a situation where your export value is less than the import value. And the reason why that they want to say that essentially is that normally whenever you import any item and then you re-export it within a particular time, if you have to pay the duty because you have not used it, you are getting it back as a refund, as a drawback. They would not like to have a situation where the export value is less than the import value because the refund will, the drawback will slightly be more. So it's only for that reason that they want to indicate that. The option available to you is maybe pay up the duties payable at the time of import, which otherwise you would have paid, and then you are free to re-export it to whatever country you want and whatever price you want. If you operate under the notification, you have to go through the notification.
Thank you, sir.
Sure. Sir, maybe we'll maybe stop here. We are already 28 minutes beyond the schedule. But thank you so much, sir. As I think Blaze also just mentioned that very there is more clarity than what we had before listening to you. Thank you so much. While there are more questions, maybe I request each of you to send it to the secretariat. We'll reach out to Mr. Shivdas or Mr. Nagendra Kumar as the case and maybe share their comments with you on those as well. So thank you. And yes, look forward to one more session tomorrow as part of the departmental audit series. So tomorrow we have one session on what are the issues which are coming up as part of the audit and what the speaker thinks should be the way forward. We have Gaurav Gupta from Bombay speaking to Delhi speaking first tomorrow. Before we have the last next week, where we'll have Mr. Shivdas again on the panel discussion. Thank you so much. Thanks all of you.
Thank you so much. God
Thank you
bless you.
very much.